This is Eric Mwathe with Mwathe.com. After the 500-day point move in the Dow, what a swing, down 300, only to rally and close as close to 600 as you can get. Pretty much a 900-point swing at some point. Now, I really have to be honest, and I mean, personally, that's the only way you can approach situations like this. Actually, I think it's best if everybody comes out and just tells what is. And that move in the market, and I'm sure like most people, whether you are long, short, in cash, was a total surprise. It surprised me, and it left me and many people wondering, what do we do next? Now, I have to admit, and I don't see a problem with that, is I had to hold on to my short position, some of them losing positions, because I didn't just want to jump the gun after that last minute 500 point move in the Dow in the last 45 minutes. So holding some losing trades into tomorrow and early next week. So the chart today, if you are in cash, I would suggest, it's Friday. I don't see why you should commit any position going into a weekend with the G20 meeting or something like that. So there might be news coming out or not. So if you're in cash, you might want to just hold off until some other time. If you're still holding on to a short position, some puts, hey, market's closed, you have your position on, you just watch the video. In this video, I don't talk about one direction or the other. I'll just show you what I see right now, and you decide. Because I don't want to, the charts change so much in the last hour of the day. I really have to sit down and decide what they mean for the market. And then we also need to see some follow through. Is this rally in the last hour for real? Is it going to follow through? Now, if it starts following through into tomorrow and early next week, then you start giving it some, you have to respect that. But I don't know for far, and I hate to disappoint you. Sometimes I have some conviction one way or the other. This one totally got me confused, and I bet I'm not the only one. Let's go to the charts. This is the I also have to say, if you went long the market, great move on your part, and I don't know how you're gonna play the next couple of hours in the market, because if you're long and you really caught the wave on the upside, good for you. You decide when you want to take your profits or not. It's really up to you. This video is basically going to show you what I'm looking at right now, and this is a Dow 1 year daily. Somebody pointed out to me, and I'm going to just show you that the Dow might be forming something like that. It's a triple bottom. I don't know that I got that right, but this low here, this intermediate low here, and this one. So something like a W formation. Those tend to be strong. Like I said, I'm just giving you what I see, so you can decide for yourself what you're gonna do. But the thing that I know for a fact is we had broken this trend in the market on the RSI, and once we broke that, so what we are doing, and this is to me speaks volumes, is we broke that trend. So let's say this red line, I'm gonna draw it, and just so we broke this RSI lows coming into this week. So when we moved below it today, we moved back and we are back testing. Now on an ideal situation, the odd aspect of this situation is this becomes the best time to go short, because this back test, if it fails, this is the ideal point. What the market might also do is might just move above that, and so this back test is not a back test, but just it negates all this line formation here, and now the new support is there. as of now, with the back test, as it comes back and back test, I'm gonna keep that line intact, because to me, I'm gonna interpret this as a back test until it moves back above this, which means that now we have to use the new lows here. So for now, the back test seems to be what the market is trying to do. We'll wait and see what happens. And if this back test, if you start seeing the market losing its momentum and starts going lower tomorrow, that's going to mean that it's probably the best time to go short the market, because it means now that we've back tested this serious breached support, then now the next move is to head to oversold areas, and that's going to be more profitable going short than going long. Now on the MACD, see, the MACD was trying to cross over. We could all see that on the main MACD, and I was kind of wondering how that was going to play out, because sometimes you want to have some kind of blip. Like, notice right here during the July 15th lows, the market was trying to cross over, failed, came down, and then moved above that. Now, because this market was trying to cross over and failed, now it's trying to move out of that formation, meaning that this crossover might not take place. But now, if we come back and cross over and break these lows here, that's going to be, again, the ideal time to go short the market. Just like you can see this formation here, the initial crossover doesn't happen on the first attempt. It's only after you failed, you come back and move above that level, that becomes a more powerful crossover. And since this is now a failed crossover attempt, if we come back and break these lows as shown by the red line, that tells you that you can go short the market with some little bit of conviction. And since until we see that, the market still remains strong, or remains undecided, let me say that. And you can make this stuff up. All these lines are parallel lines. These are the Dow hourly chart, and the last hour of trading brought the Dow straight into resistance. I mean, smack dead into resistance. So we might move out of that range. That's going to be a buy signal for those who want to go long the market. But if we start stalling, like if this line stalls the first hour of trading tomorrow, the first couple of hours of trading tomorrow, then that means that this resistance has held, and you can't make this stuff up. I keep saying that, but this line I've not moved this line. I've been following this for a couple of weeks. That line has just held on the very last hour with that spike. I don't know how this technical analysis play works out, but actually this is the NASDAQ chart. My bad. It's the NASDAQ 60-minute chart. It's the same for the Dow too, but this support here seems to have held on the hourly chart, and we can't ignore that because this market has been stalling around these levels recently. Now if we look at the Qs, quad Qs, again you see the quad Qs rallied into the close, and they also stopped right at resistance on the daily price channel highs from recent action. All of November has been stalling right there. So you make that whatever you can from it, but that's just what the market is doing. It stopped the rally dead cold at resistance on the price channel top lines. I don't know what is going to be next, but it's just something not to we can't ignore. If that is resistance, then we head lower.